Hello, if you're interested in crypto, blockchain, DeFi, NFTs, ICOs, STOs, anything else to do with the crypto and blockchain world, really, this is the place to be. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time, and they're open to everybody to come along to on Zoom, whether you're a novice or an expert. The idea is these are a great way for people who want to learn more to come along and ask questions or listen. And if you're running projects, we also hold our Gone in 180 Seconds session, which is where people come along to talk about their projects and what they are doing. So with that, let's see who's going to come and join us today. So you've been busy learning about crypto over Christmas?
Yeah, just quite intrigued to see what happens in the next few days, just with the ETF decision, to be honest, at the
Yeah,
minute.
yeah.
Um, how it could potentially affect price. And yeah, it's going to be an interesting month, I think.
Hmm.
So we'll see what happens.
Yeah. Obviously this is not financial advice, but my suspicion is that it's going to be a complete anticlimax.
Yeah,
And I think that the pricing of the ETF decision is already built into the market. And I suspect that whatever the announcement from the SEC, whether it's a yes or a no, I think it'll have a minimal impact on the prices. Whereas all the crypto influencers are all saying, oh, it's going to go to the moon or it's going to
yeah,
collapse or whatever type thing. So we'll see anyway.
no, I agree.
Yeah. We're joined by Johannes as well. Happy New Year, Johannes.
Happy New Year, all. How you guys doing?
We're good. Just beginning to talk about the potential decision of the SEC about the Bitcoin ETFs.
Yeah, but it's Monday, right? Or everyone's anticipating Monday, aren't they? So,
Uh,
um,
we'll see what actually happens. I think certainly people are saying that it's from Monday begins the window at which they might make an announcement. So we'll see what actually comes up with that. So we're joined by Hugo as well. Happy New Year, Hugo.
Hi, Happy New Year to everyone.
Hey. Good of you all to join us back again. So, anybody been doing anything interesting over the crypto winter or crypto Christmas, I should say? Or is everyone just holding off for the ETF decision? Just, it seems to be the main thing at the moment. I know certainly looking at Bitcoin's price, it's been going up and down and all over the place last couple of days. I think people are getting really excited about what the decision might be.
I think personally for me, it's been pretty decent. I guess being on chain has worked out pretty well with all the various airdrops that have been going on. I'm a huge fan of the Cosmos ecosystem as well, and that's kind of got its day at the moment, and there are loads of airdrops flying around. Crypto always pays. Crypto pays you to learn.
Yep.
That's what a lot of people kind of miss or have missed out on previously. So being on chain is really, really good. So yeah, that's been fun. Obviously the Celestia and the whole kind of modular thesis is picking up steam, and yeah, you've got like loads of roll apps dropping on there as well. So yeah, that's been interesting, and obviously yeah, the space never stops, and that's been interesting to kind of learn how all that works, and yeah, looking forward to that.
So tell us more about the airdrops. How do you monitor them? Do you just keep an eye out generally for them? Do you subscribe to any alerts? What do you do?
Yeah, no, it's extremely difficult in that sense, because especially at the moment where it's just left, right, and center, it's just especially if you've got 9 to 5 as well, it's so hard to keep up. But yeah, I guess following the right people, if you're in the ecosystem, you generally get it. You kind of generally get wind of it. Most of the bigger ones. So again, Celestia related, Dimension was a big one this week, and Saga. Mainly, if you staked Atom, which is the Cosmos token, that qualified you for these airdrops. You normally have to claim the airdrop, so you connect your wallet where you staked or whatever the requirements are. That in itself is a danger, because obviously there's loads of phishing scams out there. But yeah, obviously go through the reputable sites, and hope for the best that way. But yeah, it is difficult to keep up with all of it at the moment.
So we've just been joined by Elena. So first of all, say Happy New Year to Elena. And then Elena, if she'd have been on at the beginning, I suspect she'd have said straight away, please explain what an airdrop is, which is what we're talking about now. So for those who don't know what an airdrop is, it's probably worthwhile just taking a step back, because airdrops are a concept in crypto, which are a great way of getting free tokens. And for those who don't know, if you're a new project, for example, you might want to just kind of like jumpstart your economy by launching some tokens that you give away just to get the dynamics going, or it might be that you're using them for bug bounties. So this is where you actually open your ecosystem up, you invite people to find faults and problems, and you get rewarded for that if you find any bugs by getting free crypto. But also as well, you can sometimes do it with airdrops, whereby if you promote a token, or you, as Johannes was saying, if you lock up some of the tokens in your wallet, then you get additional tokens and so on. Is that a first summary of most of the main ways of airdrops, Johannes? Have I missed any other important ones there?
No, you're spot on. That's primarily the way. Other ways could be if you interacted with dApps. Yes, basically add on to what you said. They are, I guess it's cross-fertilization in a way, because obviously like Solana's picked up at the moment. So with Dimension airdrop, the Solana ecosystem doesn't necessarily have anything to do with the Ethereum or this kind of Celestia. But because Solana has picked up and they're trying to get that community involved as well, they also included them in the airdrop. So, but yeah, primarily use the products out there, and that may qualify you. But yeah, as you said, though, mainly it's through staking as well.
Okay, and for those who are new to the crypto space, and I'm sure we'll get people who will be joining us through the year who are just getting into this, airdrops can be a great way of getting free crypto because they're distributed by the organizations and that, just to get the momentum going. The interesting thing, and Daniel might find this of interest from the insurance perspective, whereby airdrops can mean that you're launching a token, you're issuing tokens at zero value effectively, and so people are getting them for free, but then they may go up in the price in the market. So suddenly you've got something that you've obtained for no cost that could potentially be worth something. And people don't always think about, well, what are the risks and that kind of thing. And quite often, and this is where I'd urge some caution for everybody as well, sometimes notifications of airdrops are actually scams. Okay, so you'll quite often get an email that'll say, hey, it's Binance here, we're about to do an airdrop of BNB coin, which is the Binance's cryptocurrency. To register, please go to this link, blah, 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 and send us details of your Binance account. As an example. And so you do get phishing attacks and this kind of thing, where sometimes people will think, oh, great, free tokens, fantastic. And they'll log in, they'll put the details in, and then suddenly their wallets are drained. So it's something to watch out for and be very careful of, which is why, Johannes, I'm always interested in where people find out about reputable airdrops and sources and that kind of thing.
Yeah, so I guess influencers, the correct ones. So if you're following a particular ecosystem, so for example, if we're going to stick to the Cosmos ecosystem, one of the main kind of community leaders or influencer is a chap called Crypto CEO. So that would be a good person to follow if you're interested in that ecosystem. But yeah, I think the number one rule is never click on those links. Go to so again, like I said, like Dimension was the kind of big one this week. Go to the Dimension Twitter page. or their website and see if it's legit there, and or check out their Medium. I mean, even myself, which I'm a little bit okay, I'm savvy, but I still don't even trust myself to put type in a URL. I would still rather go onto the official Twitter page, and because I follow so many other crypto people, I would still want to see there's X amount of people following them to double check. So that's my second check. A third check would be to go on the website and then check the Medium page or blog and to verify it that way. And but if you follow enough people, you kind of get a sense, all right, this one is a legitimate one. And at the end of the day, if it is legitimate, the project itself will post the links. So use the links that are posted by the project or via the website. But never text messages, never any kind of adverts or anything like that. It sounds too good to be true, and as the saying goes, it always is. So avoid it.
A good call. And it's interesting as well, you mentioned that you do click on links from Twitter. That's something that I won't do, simply because I've known occasions where Twitter accounts have been compromised, and it's a good hacking threat vector that someone compromises a Twitter account, post a link to say, hey, we're doing something. And I saw this a lot in 2017 in particular with ICO launches. So we had projects that were about to launch, that were about to distribute tokens. And at the last minute, I saw this on a few projects, their Twitter account and their website would be hacked. And there'd be an announcement to say, we're pushing ahead with our launch, we're bringing it forward by a day. Click on this link straight away. And it creates that urgency and that worry. And there were quite a few projects that fell foul of that. So I would urge absolute caution. It's interesting, you don't trust yourself typing in the URL. I don't trust seeing a URL and clicking on it. So each their own, I guess.
Yeah, no, you're very right, and you are right to correct me on that as well. As I mentioned, I usually end up going to the website, but you are right. They could easily get hacked, and that's happened. I mean, even in the last few weeks, I've seen that happen as well. So I'm glad you kind of called me out on that. Another useful thing, I guess, is as well, if you're on Telegram groups. That also kind of helps you confirm that it's something genuine. But again, I don't even click on the legitimate ones for the same thing. I would still try to go to the website and find a link that way. So.
Yeah, and I find Telegram groups fascinating because they're fantastic ways of me getting introduced to new scammers. The number of times I get messages each week from people, and they're always young, attractive females for some reason. And they're always keen to learn more about, this kind of thing. And it always starts off, the theme is consistent. It starts off like, hi. And that's it. You go hi back or wherever. And it's like, how are you? Oh, I'm fine, thanks. How are you? Thank you for asking, blah, blah. And they start trying to build up some sort of rapport relationship. And invariably they say, oh, I'm in a group that you're in. Go, oh, okay. Which one? And that's where sometimes it goes quiet, or they'll say a crypto one. So again, I think you're right. The authorized, approved, legitimate Telegram groups are fantastic. They are really, really good on that. And they usually have some great advice pinned in their comments as well. But always be wary of people approaching you directly or through Telegram. Particularly for me, of the young, attractive females who seem to like taking their clothes off for some reason. But you get this whole thing of, oh, I'd love to learn more, and I'd love to have this conversation with you about this fantastic thing that's going on. Go on then, how are you going to try and scam me this time? It's like, that's how the way it goes. Hey, so we've just been joined by Aggie as well. Hi, Aggie. And say hello. Aggie's a new person who doesn't know much about crypto, I don't think, but suggests that one of her relatives might have been into it in some way, if I remember correctly. Is that right, Aggie? Aggie's frantically reaching for the mute button now to find out where it is. So, sorry. So in the meantime, until she joins us, back to everybody else, really. So yeah, really useful. Thanks, Johannes. There's some great things around airdrops and things to watch. Hey, Aggie, you joined us.
Hey. Yes, so I was trying to get the Bluetooth going, but I did not manage. Yeah,
No.
so I would like to know more about all this world, crypto and all that. I did a course some time ago, but I did not follow any of that through. So the issue that I've got is that my father bought some bitcoins. I come from Spain. He bought bitcoins in Spain on a website called Bid for Me. And he then died, and he never left any key passwords or anything, nothing. And I actually did not know anything about it until my mother mentioned it, that he had some bitcoins, and my brothers had tried to get the bitcoins, but did not get very far. So I took an interest in it and tried to contact the page where he bought the bitcoins, and I sent them death certificate and family book. So they said confirmation, yes, he bought some bitcoins, but he put the bitcoins on a platform to invest. I think it was, I don't know what platform. So now I'm thinking, and then I stopped doing anything. I think it was last year, sometime January or something. And I stopped doing anything because I thought to myself, well, I don't know how to get these bitcoins because I need to prove that I've got some knowledge of it, because what I want to do is inherit these bitcoins, and they're gonna tell, if I don't know much about it, they're gonna tell, well, we're not gonna give her nothing because she has to go and so I've been trying to connect with people that know about this for years. I mean, the people I've met through this journey, I've met some people that were very were not keen to help me. So that's why I'm here, really. I've got an interest in it because obviously I would like to inherit this, because what my father did was a very safe buy that is generating money that is very slow amount, but in a very stable, steady way. So I thought, well, if I inherit this, well, it's something of value. But obviously, it's not my career. It's not anything to do with what I do. So it's very hard for me to get into this. So I'm trying to make an effort now again. That's it.
Great. Well, I'll suggest a couple of things straight away. First of all, obviously, with this being a public group and it's broadcast and everything, do not share any personal details. So don't start saying how much, or any value or anything like that, or any of your personal details. The thing straight away to be wary of is if you do get approached by anybody, whether it's either the company that you've been dealing with or anyone else who says, I can help you, do not send them any money. That's a starting point. What you'll quite often find, and I don't know the details of the website that your father was signed up to, but some websites look legitimate until you try and take the crypto out. And that's where they start saying, oh, okay, well, in order to pay transaction fees, you have to send us more money and this kind of thing. So actually, it can actually sometimes be a scam. So just be careful of that. So I think it's great that you're here to learn. That's fantastic. And so by all means, if you have basic questions, and ask away. That's great. But my first starting point for anybody really in the crypto world is just like in traditional finance, it's filled with scammers, criminals, and that who will exploit you. And legitimate websites, legitimate companies will not be worried that you do not have much knowledge. That's okay. So don't worry about that, because they're quite used to dealing with people who've just taken an interest, registered, and that. So that's not a concern. And to be honest, you'll find if you just sit in on a few of these calls and listen and pick up some of the knowledge, you'll probably be more knowledgeable than most people in the crypto space very, very quickly, because there's a lot of people who probably know even less than a limited amount you know at the moment. So straight away, though, I'd say certainly educate yourself. Don't send money. Don't share personal details, and tread carefully. and let's see if we can help you with your education and build up from that. In terms of recovering the crypto, that's where if you don't have the private key, which is kind of like a password.
I haven't got that, no. But I've got proof that it's my father, that he bought the Bitcoins, that he put them on a platform, and that I'm his daughter.
Yeah. So if he has put them on a legitimate platform, so for example, there are exchanges like Binance, Kraken, Coinbase. These are like quite well-known international companies, and that they do have processes for dealing with estates or people who've passed away and handling assets and that kind of thing. They do actually have processes for that. So if he was with a legitimate firm, then they should have a process to deal with it. And also, if the cryptocurrencies were actually on the platform as such, i.e. the company was looking after the crypto and he just logged in with the user ID and a password, then that means there's a possibility that they can recover it. If, however, he has taken full ownership of the crypto himself and he held them in a wallet, or rather the crypto keys in a wallet, then unless you've got access to that wallet, you're going to struggle to get access again. So the starting point, I guess, is if it is a legitimate firm who run the platform, then approach them in the first instance and see what they can do to help you.
Yeah, I will do that. I mean, my knowledge is that he bought the Bitcoins and invested them in a platform. I don't believe we did not find no external device that he may have used. So I gather that, and also when I can't remember now because it has been years, because I've been trying to deal with this, but life comes in the way, obviously. And I tried to put a key number that was very long, and you put it online, and it comes like the money somewhere has been invested and it's creating income. So that's why I'm here, really, because I could see that he's not got the money in a device or anything like that. He put the money online somewhere.
Okay.
In crypto.com, I think it was.
So it sounds like if he was getting a return on it in some way, then that suggests that he's either doing a thing called yield farming, or he's locked the crypto up in some way, which means it's going through a platform. Now, if that was happening through a legitimate company, then you should be able to, if you can track down which company it was, you should be able to approach them and say, hey, I'm the benefactor of this thing. Please provide the details of how I recover the assets. Or you could appoint whoever was the executor of a will or whatever to do that on your behalf, which is another way of doing it. So it may well be for a relatively small amount. Companies just won't be interested in helping, but it could still be important to you. So I would suggest if you can work out which company he'd invested through, then approach them. They might be able to help you. But I would urge real caution, because a lot of crypto farming, a lot of yield farming companies who say, oh yeah, here's your account, and you can see your account going up and up and up. And then when you actually try and take the money out of it, that's where they suddenly say, well, it's all locked up and you'll have to send us so much money to get it back. And that's where you actually discover. So this is where you discover that something that looked legitimate could be a scam. As I say, do not send money, first of all. If anyone says, to release these funds, you need to send us money, because that's quite often a scam in its own right. So
yes. No, I think it was a legitimate website, like crypto.com or something like that.
Well, crypto.com is legitimate. That's one of the well-known companies. In which case, if you can find the details, if you can go through his emails or anything and find out proof of what his account number was or whatever, and reach out to them, they might be able to help you.
Yeah.
if I may interject, but I suspect it might be what Gary was saying now, unfortunately, because if it was on crypto.com and part of their like kind of earn programs that they have, you wouldn't, unless you have access to his password and to that account, you wouldn't have been able to see the kind of the yield. So yeah, that's why I suspect it might be something like what Gary the latter he was saying, where he may have pulled it out, pulled it into this pool with an external company, and then you've typed in on the blockchain scanner or ether scan of some sort, so you can kind of see it. So it looks like it's on chain, but it's with a pool. So yeah, and
I just
if
put
it
it on
was
Google.
in crypto.com, but I do advise you follow what Gary said. But if it wasn't crypto.com platform, you wouldn't be.
Yeah. I haven't got no password. I can probably identify those bitcoins and say where that he put them there, but I don't have no password. Just a key, some. I don't know.
So if he was registered with crypto.com and if that's who he was investing through, then because they are considered a reputable company, then you could reach out to them and explain. But be very, very cautious with any other companies and that kind of thing, because there are a lot of these firms who offer yield farming, and they say to you, if you do register, oh yeah, your crypto's going up each week, and here's the statements showing it's being reinvested and everything. And then when you try and take the money out, that's where they suddenly say, oh, actually, you need to pay such and such a fee to release it. And then you send the money, and then it's like, oh, actually, we need some more money and some more money.
Oh, wow.
And sometimes it can actually be a scam. So I would tread very, very carefully. It might be legitimate, in which case just get in touch with them, but never send any money. Or you find sometimes they'll say, oh, you need to send some more crypto or something, which is even that sets off alarm bells again. So please do be careful, and I wish you well with that.
Yeah. We've got some emails and his email address and all that. But that's all we've got. So yeah.
But maybe it's a project for you in 2024.
Maybe
take a look gradually.
Definitely.
But Bruno,
I'll get back to you to see if they come up with any response, because it took me a long time for the Bitcoin.com actually to send me proof that he had bought the Bitcoins. But then they were saying, well, he's bought them Bitcoins, but he's put them somewhere. So they were kind of saying, well, we don't have nothing to do with it. So yeah.
Okay.
So,
well, again, if they've gone through Bitcoin.com, which is usually that's not actually for Bitcoin as in BTC cryptocurrency. That's for Bitcoin as in BCH, which is Bitcoin Cash. This is the thing, you'll learn that there are different types of Bitcoins as well, which gets confusing. But again, Bitcoin.com is typically recognized as reputable.
So it must be like a Spanish website where people buy the Bitcoins in Spain. Bit for me, bit to me. That's the website called.
I don't know. Gabrielle's on the call at the moment. Gabrielle, I don't know if you're listening to this. Do you know anything about that? I mentioned Gabrielle simply because she was in Madrid, if I remember correctly, and so might have known about that. But no, she's staying quiet today. So there's just a few general suggestions, and the comments that Johannes and I have both made apply to everybody who's watching and listening to this as well. Always be very, very careful and very cautious, and be even more suspicious if people approach you and say, hi, I heard that you've lost some things, maybe I can help you. Please send me your details, and if you send me your bank account details, I'll get it transferred. It's like, no, do not do that. It can be quite so. So anyway, but do stick around. Maybe there's some other things you might be able to learn by watching and listening. But
my idea is just to transfer his account with my just transfer it to my email address, and instead of his email address, my email address, and I'll deal with it. That would be great, no?
It was one of the things about cryptocurrency, though, is that it creates a whole new environment where you don't need intermediaries. Now, what that means is that if you've got a problem with a bank account, up until a couple of years ago, in most places, you could go to your local branch on the high street, knock on the door, prod the bank manager and say, hey, sort this out. The thing with crypto is it doesn't work that way. You'll find it's very, very difficult to find actually human beings to speak to. It's very difficult to get phone numbers, this kind of thing. It's usually all done via email and that. So it can be quite challenging. And that's one of the reasons I set this group up originally, because it does get a little bit nerve-wracking that you're not quite sure if you're doing things right. And you feel a bit lonely and isolated. And it's like, maybe someone else might be able to know on this. So anyway, we'll see if we can help build your knowledge if you do stick around on that. That'd be good.
Okay.
But folks, open it back up. We've got a few people who've joined us today. I don't know if anyone's got any immediate questions or anything they'd like to share. Daniel's always good for coming up with something because he's been doing some research at some point and he likes to ask some obscure question. Daniel, you got anything to share today?
Yes, I've got you on, Gary. I've got you on. So I've been doing a little bit of research on like tokenization of assets and NFTs. And just for the benefit of me and probably quite a lot of people in the group, just the use case of NFTs potentially in the future and now, and tokenization of real world assets and how that can help society going forward.
The how it can help society going forwards is a really interesting one. It's probably beyond the limits of whatever. Let's take a step back, first of all, and talk about tokenization of real world assets and what we mean by that, which I think you're saying the real world assets. So effectively what we're saying is think of a real world asset. So gold, a sports car, property, fine art, all of these things at the moment. So these are all things that are typically of high value that cannot easily be divided. So you think about the Mona Lisa, for example. Mona Lisa, you can't exactly tear it up into little strips and have loads and loads of people owning it and that kind of thing. So what you can do is you can create what's called an NFT, or a non-fungible token. So this is simply, I describe it as a digital receipt of ownership, really. And so you could have a single token that represents the ownership of something. So in the Mona Lisa's case, you can have a single token that is like the receipt that says you own the Mona Lisa. And that's just a digital representation, okay? Because it's kind of interesting. Does anyone know where the register of fine art is? Does anyone know where you prove that you've got the Mona Lisa and that you own it? No? Anyone know where the register is?
No.
It's because there isn't one. Okay. Okay. And so this is where fine art, interestingly, is probably one of the biggest areas, and this is not offering advice or anything, but it's one of the biggest areas for fraud and money laundering, because you can end up with a piece of fine art, say a Canaletto or whatever, and the only way of proving ownership is either you've got a piece of paper that proves that you bought it from like an auction house or somewhere reputable, or you've simply got a document that says that you own it, or you've got physical ownership of it. So if you go to, is it the Louvre where the Mona Lisa is these days, wherever? Well, the fact they've got it on display is a good indication that they probably own it, or at least that they've been loaned it in some way. So if you've got an NFT that is on a blockchain, so an immutable register, effectively, you could use that as a registry of fine art. And so some companies are doing that now. So if you take a look at Sotheby's and Christie's, so these are two fine art dealerships who do a lot of auctions. They now auction NFTs and digital art and that kind of thing. So an NFT is simply a way of representing ownership. Now, let's go back to the Mona Lisa again for a minute. And this is where the growth area is. Mona Lisa is worth, I can't even remember how much it was last valued at. I think it was $800 million or something, which is beyond my pay scale, right? I can't afford that. But what happens if you take the ownership of that, and instead of having a single token, you have 1 million tokens? So all of a sudden, each token of $800 now means you've got fractional ownership of the Mona Lisa. So this is where you've got fractional ownership of things. Okay, so everyone gets that as concept. You can either have a single token that's the ownership certificate, or a token that represents partial ownership. Okay. Now the neat thing about having partial ownership, there's two things. One is obviously it's a lot cheaper because it's now 1 billionth of 800, and two, it's quite easily tradable. It's a lot easier to resell something that's worth $800 than it is something that's worth 800 million. And so this is where some NFTs now being used as evidence of ownership of partial assets. So this is where you've got this like portion of ownership type thing. Now, let's go away from the Mona Lisa and think conceptually how that could work with a bar of gold. So you've now got an ingot of gold that is sitting in a safe, in a safety deposit in Zurich or something. And that bar of gold is worth $50,000, for example. Well, again, you could add an NFT that effectively acts as the certificate that proves ownership, or you can have 1,000 of those that represents a portion of it. So here's a way now, and this is how money came about originally. For those who don't know about money, originally, hundreds of years ago, you had merchants who had these gold bars or whatever, who deposit them with the bank, and the bank would issue a certificate of deposit to say, here's your gold bar certificate type thing. And then the bank suddenly realized that actually people didn't come back and collect the bars of gold very often. So they started kind of like renting them out. And that's where money came from, that they issued more money tokens representing ownership of the gold bars than actually existed. But that's another story. Come back to the tokens. So you've now got a token that can represent partial ownership of a gold bar. Again, that can be tradable. So that makes it a lot easier to trade in NFTs than it is physically having to go to Zurich, knock on the door of the safe and say, please give me my gold bar and everything. So we talked about fine art, we've talked about gold. There are projects that are doing that with sports cars. So you've got a high value, very rare Ferrari or whatever. Well, you could potentially have fractional ownership in there. That all makes sense so far?
Yes.
Okay. So the next one, which is growing at the moment, is why not extend that to property? And this is where it starts getting really interesting, because if you think about how expensive fine art is, or a sports car or whatever, property, again, is something that most people can't easily buy one of, but they could buy a portion of. And this is where there's a growth, and there's always these projects coming up about tokenizing real estate. And most of them fail. And the reason most of them typically fail is because they're coming up against crypto regulation and real world regulation. Okay, so this is where it can be a bit of a challenge, because there are rules and laws on how many people can own a property and all that kind of thing. But there are ways around that by creating what are known as special purpose vehicles and all this kind of thing. So coming back to Daniel's original question, really, about the impact on society. Well, what it now means is that if you tokenize real world assets, but don't do it as a one-to-one, but do it as fractional ownership, then it opens up the opportunity for people to have fractional ownership in asset classes that they wouldn't be able to otherwise afford. So not many people can go out and write a check to buy a house, has $300,000 or whatever type thing. And the same with the gold bar, $55,000 for gold bar. Some people can do that. But what they can do is they could potentially buy a token that represents a portion of that. Okay. So one of the things around societal impact is that tokenizing fractional assets or fractional tokens opens up the opportunity for people to invest in things like gold and property without the big hurdle of having the capital that they normally need. So that's one thing. So that's a potentially good thing. The equal thing on the downside, because again, this is not financial advice, is that it means that it gives them an opportunity to have fractional ownership in something that can go up in value or down in value, and it can go either way. So that's one of the risks, that if people start buying, portions of a property and the property goes down in price, then it can go either way. Daniel, does that give some kind of insight and some thinking around that?
Yeah, definitely. No, thank you very much.
I don't know, anyone else got any other thoughts on that? Hugo, you're smiling and nodding some of that.
Yeah, no, that's precisely because I do work on a tokenization, real estate tokenization project, and it's a lot of the things that you said. I like the way you explain it because it's a lot of back to basics in a way. I think you explained the benefits brilliantly. And yeah, but you're right. The regulatory issues are tricky. And then one of the advantages that I see in particular is you can actually do this globally. That again, it's a plus and it's a con, right? Because on one hand, you can access capital globally. You can invest in properties in some other country, things like that, which is something that traditionally, because you have to obey local laws and local capital and a lot of those things, you are not bound by that anymore, right? In terms of the technology sense. Legally, you are, and there are some certain things that you have to comply with. Either way, I think personally that it's a plus. But like you said, I mean, there are risks, and you have to do it right to make it work. But yeah, that's probably the one benefit that I would add in terms of the way I look at it is looking at it more like the person selling a property is. Before eBay, you wanted to sell a pen or something, right? You could have probably access to 5 people who might buy that pen. Once eBay came around, you had 500,000 people who could buy that pen or that whatever. I think it's the same for tokens. So the liquidity increases also on a global level, at least in theory, right? Again, considering all the legal aspects of it. But yeah, I think this is why there's a lot of potential. I think somebody's going to figure it out. I think there's laws around securities also, and well, in the US they apply in certain ways. In the UK they apply in other ways. In every country applies those laws in different ways. But yeah, that's how I look at it. It really opens up that opportunity to people all over the world. And again, my perspective always has a touch of emerging markets, as in, like I said, buying a property in Mexico, let's say, is tricky, it's expensive. Financing it is really, really expensive. Let's say you can get a mortgage for a 15% mortgage, and that's a good rate at the moment. Whereas in the UK, you can get financing for 4%, right? So there's a differential there, and there's different currencies and everything. But the point is, there's an opportunity there. I think it's big. You probably couldn't do it without a technology like blockchain, which is why I'm really excited about it. So yeah, that was what I would add to your answer. But yeah, on top of that, because all of your points are really, really good.
It's a really good point about the globalization. And also, the other thing as well, I've seen this argued in various ways, and I'm never convinced by it, that you introduce what's known as a secondary market. So you think about if the property market, for example, is the primary market. So you're buying and selling properties. When you introduce tokens, which represents fractional ownership of it, you then create a market for the tokens, which is a secondary market. And the argument is that increases liquidity. I'm not entirely convinced by that. I've not always seen the case of it, but certainly it does offer the potential that it means that it's more likely that you can find people who want to buy $50 worth of a property than $500,000 worth of a property. And so there is the argument that increases liquidity, it increases access to capital. And so, as Hugo was saying, with the prices of markets and that, of mortgages and that, then potentially you could have a situation where someone creates a token with the purpose of using it to purchase a property. So you could have it that rather than someone going out and getting a mortgage, then they work out, well, if I tokenize this property and we have proportional shares in that, then it might be a different way of affording it. I'm not totally convinced by that as yet. As Hugo says, someone's going to crack this, but nobody has yet, is my understanding. So we shall see on that.
Add one quick comment. No, I agree. It's tricky. I mean, I hope we're the ones who are going to crack it, but if not, somebody else will. And this is why I'm in these calls to figure out how else we crack it. No, the comment I was going to add is, in terms of the liquidity and secondary market, I think you're right. But there's I think, a relationship with the underlying asset in the end. And the example I use is, for example, if you are going to tokenize a commercial property, shopping mall for something, right, that is worth several million pounds, you might buy tokens in it, but at the end of the day, if you ever wanted to redeem that token for something, the underlying value is a property that is worth several million pounds, right? If you do the same in a residential property that is worth, let's say, 200,000 pounds, something like that, it's a lot easier, right? So I think there's a relationship there. But most of the projects I've seen so far have to do with commercial real estate. So that's one thing. Again, I don't have a full answer there, but I think that might be that's a point that we have to consider. The other one with the secondary market that you mentioned, I think I agree. There's a way in which you could just buy, instead of having one person come up with 200,000, you can come up with, I'm going to simplify, 20 people who can put the money together and do that instead of having to buy a mortgage, right? The other cool thing that I think is you could use those tokens as collateral for borrowing, like there's some protocols that you can use to borrow money against Bitcoin or Ether or something like that. And actually the rates are pretty good, and they're over collateralized and so on. But actually that's one of the things we're trying to do as well is you can use it as collateral to borrow at a much lower rate. Mm-hmm. And again, if you're in a country where the monetary system is not as good as the UK or the US or a developed economy, that's really, really viable for financing projects, for doing lots of things, right? So there's lots of applications, I think, especially built on top of all the things that are possible now in crypto. And again, let's see if we're the ones who crack it or if it's somebody else, but I think we're going to see some really, really cool things that you can do with tokenization.
And it's interesting as well, you mentioned about the effectively loaning against the crypto, because in a way you think about how a mortgage is kind of you're loaning against the value of the property. Well, if you tokenize the property, then you could potentially loan against the value of the token against the property. And this is where I start getting very nervous. I was actually involved in a project that was looking at offering loans against crypto. But you have to be very, very careful, because obviously if you lend somebody some money and then the value of the crypto goes down, then they've got an exposure. And so you've lent them some money and they now owe you even more money and that kind of thing. The project I was involved in actually was quite unusual in that it was using a certain slightly different but completely approved way of offering an asset as collateral against a loan, which was it was known as a non-redemption based loan. And what that basically means is that if the value of the asset that you're loaning against decreases, you don't have to pay the loan back. You just surrender the asset. So you think about if you handed over a Bitcoin, for example, and if you put a Bitcoin up as collateral, and that at the time was worth, say, $30,000, you'd probably been able to borrow about $15,000 against that. Well, if the value of the Bitcoin dropped down to $20,000, then if that was dealing in traditional markets where you were doing gearing and this kind of thing, then you'd be overexposed and you'd have to put more money in than that. What our project was doing was saying if it dropped below a certain amount, then we just cancel the loan and we take ownership of the crypto asset. So it's kind of like having a bet in a way. That is actually better, I believe, ethically than some of the other schemes, whereby if you had a Bitcoin that was worth $30,000 and you were loaned $15,000 and then it dropped to $20,000, you'd then have to pay the gap. You'd have to pay the $10,000 before you could get your $15,000 back. So almost a little bit like what I was saying with Aggie before, be very, very careful about where companies say, oh, before you can have your money back, you have to send us some money. So it's just an additional thing on that. Daniel, does that give you some insights and thoughts around all that space?
Yeah, definitely. So I was just gonna, could I put an example forward here just so I make sure I understand? So, for example, if I owned a house in full and I'd completely paid the mortgage off and the house was mine, and I decided, and it was worth £500,000, and I decided, actually, I'd like to sell half my equity in the house so you could tokenize and almost sell as like a marketplace
Yep.
half of the house and receive the 250 grand for, let's say, however you issued however many tokens.
Mm-hmm.
That's really interesting.
Yeah. So that's the concept. And that's where straight away you hit two problems that a lot of people don't think about. The first of all is the very fact that you're using crypto to tokenize it means that certainly in the UK, you'd have to be registered with the FCA, you'd have to go through all sorts of approval things and everything. So you've got one hurdle straight away. And actually getting on the FCA crypto asset register is not an easy task. It's quite a hurdle in its own right. Then you got the second thing, and this is where I talk about real world legislation. So most countries have limits on how many people can be considered a partial owner of a property. And in the UK, I think for domestic property, it might be as low as 4 people, which means that if you're going to tokenize half the property, then you can only have 3 tokens, which is a bit limiting. So it kind of defeats the object. So that's why what you would actually do, and again, this is not a recommendation on how to do stuff, blah, 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 but you'd probably put that property into a trust, and that trust would have what's known as a special purpose vehicle. So that's a separate company that has got partial ownership of that asset in some way, and you sell tokens in that special purpose vehicle. So that then gets around the whole thing of more than 4 owners in a property. But yeah, there's various companies thinking through this. And it's definitely where people are exploring it. But as Hugo says, there can be lots of problems with it.
The other comment I was going to make is, just to make it more interesting, is, of course, you still have to apply or comply with all the anti-money laundering regulations and things like that. And so on. Again, there are ways around it. Well, not around it, but there's ways of dealing with it. There's a project called Goldfinch that lends. It basically pulls money together from crypto and then lends it to off-chain companies or financing companies in emerging markets. And what they do is they use a service to prove identity. So they it's a third-party provider to make sure that you say your name is Hugo. Well, you have to have an ID that says that you're Hugo and everything. They use a scan and everything and so on. And then they issue, once you pass those tests, they issue an NFT that is not transferable. That basically says, well, you pass the test that says you are who you are, right? So that's one way in which they do it. I think it's quite clever. I'm sure there will be more. But yeah, so I think my take on this is that this real world asset tokenization has a lot of benefits. It has a lot of regulations on top of it. But I think also that the industry will come up with more solutions because there's people working on it. And there's huge benefits.
The other one to throw in, Daniel, and I've seen a company trying to do this as well, is say you weren't actually living in the property, but you owned it. You could potentially then rent it out, but then securitize. So this is where you effectively sell the rights to the future rent. Okay, and you could tokenize the securitized revenue stream. And that gets really interesting because whilst there are financial regulatory rules around financial instruments, so things like loans, investments, pensions, insurance, all these kind of things, the market on securitization, as I understand it, is not a regulated activity. So it means that selling future revenue streams is not considered a financial regulated instrument. So you could potentially sell tokens to give the beneficial return on the future rent. Those ones kind of like blow your mind of something else that could be done as well. Or you could do, as Hugo says, some companies, what they do is that they don't actually own the property, but they take a loan out in some way to pay for the property. And they've got all sorts of complex intercompany type things, which makes it very interesting and way beyond what I understand. So some thoughts for you there, Daniel.
One final question, Gary. When you said about future revenues, securitizing future revenues is not a regulated activity, but that depends by country, right? I mean, in the UK,
yeah,
I mean, that's good news, and I love that. In the US, you would get into a lot of trouble, right? Or...
I don't know. I'm not familiar with US regulations on rental of properties.
Okay. I'll try to find out and have an answer. From what I understand, it's you just. Well, I think it also depends on who is running the SEC and so on. But right now, the SEC thinks that anything is security and so on. But judges say otherwise. But that's a good question. I'll try to look into it.
And it's a really good point to probably finish on as well. That first of all, anything I'm saying here is opinion based, and go away and do your own research. It's not a financial recommendation or legal advice or anything like that. And it will vary from country to country. You're absolutely right to pick up on that, Hugo. Some companies will have rules around what you can and can't do, whether some activities are regulated or not. Definitely very true. And it is that risk that quite often we drop into the jurisdiction that we live in, but as a habit. And I sometimes forget we've got people from different countries. So a really good point. Thank you for that. Folks, we're almost out of time. We've had pretty much an hour talking about what was initially, we started off talking about airdrops. Then we're talking with Aggie about how potentially recovering funds from an estate where somebody's passed away in some way. Then we talk about NFTs and many use cases there and the potential. So unless anyone's got anything urgent, I was going to suggest we close it off for the day. So that's quite a lot to cover, and I normally like to close on the hour. So no one's putting their hand up or anything. So I'll say thank you everyone for coming along today. I hope that was of interest. For those who are new and haven't come along, you'll find for those who are new to this space, you probably won't understand 90% of the conversation. It really is. You'll pick up little bits and it'll build up and it'll build up. And then, I'm seeing Elena kind of smiling there. I'm sure she's been through this journey where at the beginning you're thinking, what are they all talking about? And then gradually...
The case with me, yeah.
And gradually the pieces build up. And then before you do it, you're doing a master's degree in it in some way. Anyway, folks, thanks for your time. Hope everyone enjoyed it. Have a great day. Bye for now.